All right, everybody, welcome back to the Cashflow Chronicles. Let me just double check everything's getting started up. Okay, yes, we are live. January 23rd, 2025, second episode of the year. We are on episode 36 of season 2. Always a good time to be back. For some reason, it's not going on X. Okay, now it's on X. Okay, very good. Mr. Patel, how are you doing, sir?
Tired, man. I took my mom to the airport on Tuesday night, and it was bad because in Georgia, like literally, I was driving from Savannah to Atlanta, and for some reason, like it's just a winter storm just came in, and while I was driving, it just got really bad. It took like six. Normally, the trip is about 3.5, 4 hours. Dude, it took me like 6 hours because there was like traffic along the way, but my mom made it to the airport and the flight went like left somewhat on time, so it ended up doing well. So I'm glad my mom got to go. And yeah, other than that, man, I've just been tired. Yeah,
working too hard.
Yeah, working, man. I got to take some time off. I'm thinking about I need some just me time.
With or without the missus?
No, probably with the missus. I can't when you get to a certain age. You trauma bond, and it's hard to do things without the other person. It just doesn't feel right without the other person. See what I'm saying? Because she's listening. I know she's watching.
What if you?
And I don't want to sleep on the couch tonight. So
what if you WhatsApp me later and tell me that? No, I'm just kidding. Don't do that. She'll go through your phone and be like, I knew it. Yeah. Anyway, let's just get after it. Welcome everybody. Always a good time to be able to hang out with me and Mr. Patel. Sometimes it's hard, us both juggling 9 to 5s, but we're glad to provide a show and are glad to answer people's questions about investing and provide that different perspective lens. And yes, Chris Patel is the man. I appreciate everybody stopping by. I know it's mostly for Chris, but I'm glad it is.
No, come on, man.
I'm sure. Tails.
Dude, a lot of people followed you into Rocket Lab, and they are doing really well. I know Garcia, especially, he's at the multi... I think he sold some Palantir and got into Rocket Lab kind of heavy.
Yeah, so. He's getting so rich that he has to start juggling what positions. He's doing really well.
No, you were definitely right about the Rocket Lab thesis with that. Them being the close competitor, like number 2. But here's a question: with them right now, they're already valued at what, like $16 billion. Do you think there's still a lot more upside left, or do you think the thesis is kind of played out a little bit now?
I mean, it depends where people are looking, right? I mean, you're looking 10 years down the road, you're looking next week. True. I think that there's a lot of catalysts between now and then. They're going to try to replicate comparable to what SpaceX has done with constellations and get that up in the air. And so if anybody thinks that this is kind of like the peak, once they get Neutron offline or online, up and running, it's to the races, man. I wouldn't be surprised by the 2030 timeframe. If you're looking at north of $3 billion in revenue, they'll probably have some constellations either being started, meaning their own constellations, right? Not for Global Star, which they're creating, not lunar landers like they're creating for Firefly, or not SDA, Space Development Agency constellations, which they are also developing, but their own. The ones that they own, they get the revenue, the space, the space systems revenue from. They have yet to reveal it yet. I don't know if they're just trying to make sure that they get off. Dude, some people are just so fucking stupid. So yeah, with that, I just think that if you're looking long term, there's definitely still a lot of upside, and I think that anybody that's trying to understand what is potentially the opportunity set. I mean, just look at where SpaceX was, very early on, right after they got the Falcon 9 off, and it took them several years to get to 10 launches per annum, but once they did. Obviously, they got valued very heavily. So, I'm not saying it's an exact analog, but at the same time, the cost of entry of space is very difficult. But
the only thing that gets me is I understand the valuation part. In the long term, how this could be this could be big, but from a commercialization standpoint, like what is the profit margin they expect? Is there some like documentation that they've kind of published based on their estimates?
So gross profit at the moment actually is 30% of their space systems and launch business. But keep in mind the launch business, which they claim is kind of like at its peak once you get to 6 launches per quarter for the Electron rocket. I don't necessarily know if they've given quantity as to what their, or not quantity, guidance as to what their gross profit margin would look like on the Neutron. But keep in mind the Neutron will be fully reusable. And at least the engines will be used for at least the first rendition of the design up to 10 times. So if you think about it, I anticipate that they're going to try to get a 50% profit margin on the initial launch. But then if you're able to do that 10 times, then, you know, you get a 50% profit margin on the first launch. Then all you're really paying for is, you know, the turnaround and everything the like. There will be costs associated with that. But that initial chassis will be able to be potentially used 10 times. And so, you know, the cost of that will over time be $2 to $3 million per launch, and you're charging $55 million a launch. So, you know, you're going to get a lot of running room out of that. And so I don't think that people have fully understood where that comes into as of yet. And so I'm kind of curious where gross margins go with that. But also the space systems business is huge. It's over 70% of what the actual revenue is. I think if I'm going to mess up the numbers here, but 70 to 75% of the revenue for Rocket Lab this year for fiscal year 24, they haven't reported final numbers yet, but 70 or so percent is going to be from satellites. So creating things for Globalstar, creating things for the Space Development Agency, NASA, and many others. And so I don't think that they just probably think, oh, well, they're only launching once or twice a month. It's really not that big of a deal. It's like, well, you know, I think the quote I'm going to get wrong here is like over 50% or around 50% of everything that goes into space has a Rocket Lab logo on it. So like people get all fired up. They're like, oh, Firefly, man, they won the lunar lander contract. It's like, well, who did Firefly immediately subcontract out to? They subcontract the Rocket Lab for the solar panels. They subcontract the Rocket Lab for the space software. And then same comparable for what happened with Globalstar. Globalstar subcontracted MDA, and MDA was like, well, we don't know what the hell we're doing. So they subcontracted out to Rocket Lab for the buses, which is like the actual like frame and everything that gets integrated into it. And so, you know, people fired up that Globalstar is getting this deal from Apple. It's like, well, that deal, yeah, prime contractor was Globalstar, but who was the one that actually, you know, put it together? And now, if you look at the Space Development Agency contract, Rocket Lab's a prime contractor themselves. So the margins on that is going to be much greater than when they were being subcontracted out to. So anyway,
what about like
weekly, but
what about like cash burn? Like, do you think that they'll have to do a capital raise anytime soon? With
I don't think
Neutron?
so. I mean, I know Amit, who hasn't done any research. He bought 100 shares and he started, trying to get people all fired up in his chat either yesterday or today about they'll probably have to dilute, and it's like, they did their dilution earlier in 24, and they did it at a price where they were able to get, I think, $300 or so million. And with that, they now have $500 million on the balance sheet at the end of the third quarter. So they'll probably end up with about 480 or so million at the end of this year. And so they're only really burning 20 or 30 million a quarter. And that's really the big cash burn is the Neutron rocket. Once the Neutron rocket gets completed, they'll be able to actually start getting revenue from that. And then hopefully that within 2 to 3 quarters. So the first quarter of 2026 is kind of my anticipation. They'll actually be able to generate break even and actually turn a profit. And so I would anticipate they maybe burn from here another after the fourth quarter, so 480 million. I think that they'll probably burn another 100 million because it's going to cost some money to get it to the pad and everything like that. But
I mean, I'm looking at their cash.
They still have 350 to 400 million dollars left.
I'm looking at their cash burn right now, like operating cash flow. They're not, I mean, on an annualized basis, they're fine. Like they're barely burning anything. Like 100 million is nothing. And then like another, and then they've got another 55 in CapEx per year right now, which I'm sure will go up, but it's they've got plenty of runway where they don't have to go out there and dilute. I mean, yeah, they issued some debt like earlier this year, but I mean, as long as they can grow their cash flows, which eventually they're likely to do, it should be fine. There's no risk. Like I said, with companies like this, the only thing that always seems treacherous is like bankruptcy risk. But it seems like they are developing a backlog, which is always a healthy sign, right? And like I said, it's as long as the profitability is there, eventually makes its way into the business model, that'll be something interesting to see. Like right now, I was actually looking at, and I've been looking at ASTS for a little bit. I like their business model and like some of the moats that they've developed around the business via some patents that they have, and also the partnerships that they have with some MNOs. But I haven't done enough research to the point where I'm 100% confident in them just yet, because SpaceX is a competitor. And I do think that it's going to be more of a, like an oligopoly rather than a monopoly in space. Because I mean, no one wants an oligopoly, right? So those MNO partnerships are the main driver behind ASTS's future potential for me. The only thing is I don't know how to value it, because there's no other businesses out there that are, they're not generating any revenue, and SpaceX is private. So you don't know what kind of potential there could be for services, so their direct to sell technology is actually something very interesting to me. And the way that they want to set it up is that it's almost like an infrastructure, like a space infrastructure provider, very similar to the business models like American Tower and Crown Castle and SBA Communications, where basically they handle the uplink portion and they handle the infrastructure, and they just basically get paid revenue, for it. So they spend a lot of money on capex to get things in the air, but then once that's done, it's literally just cash flow, and the cash flow eventually just makes its way to shareholders via either dividends or share buybacks or whatever. And it's like a nice long-tailed, steady revenue business, So that's something to keep my eye on. But then again, like I said, there's that giant in SpaceX that's a competitor that and that, so this is where it's a funny thing, because SpaceX, being a competitor, is also the one that puts their satellites into the air. So I think like some of the things that they were doing was actually partnering with Rocket Lab to, so that this way it's not like SpaceX could cut them off and basically like literally like hamper their future growth and development ability. So like I said, it's something to really keep an eye on. They did a private offering today, and so their stock was actually down. So that's why I mentioned the whole Rocket Lab thing, because when it comes down to it, even if like a business is really good, they have the technology and everything, there are times in the business's life cycle where they're going to run out of capital. And if they run out of capital before they get to the point where they're making any real money, that means that it's not really good, right? And usually they'll either have to do it via share dilution, or they're going to have to do it through debt issuance. And debt issuance costs right now are like through the roof, especially for a company that's not generating any revenue. Imagine right now going and doing an offering. So what they ended up doing was doing a convertible debt offering, actually. Or I have to look it up what it is.
Cap call, I think, and it's comparable to what SoFi did in 24, and it's comparable to what Rocket Lab did in 24 as well. But going back to what you say, I'm not saying that Rocket Lab is immune to any of this. I mean, let's just put, for example, that Neutron doesn't actually take course until 2027. That I'd be a lot more concerned. But I mean, even before we did the cap call raise in early 24, I think we were going to be okay without having to do any raises. But I think where they came from, and where Adam Spice, who's the CFO, has done a phenomenal job with acquisitions and bolt-ons for the company over the past 4 to 5 years. He basically was just like, look, we have the opportunity, and it's only diluting, like, I think it was like 8 or 9% of the stock. They got for $300 some million. I think it was actually maybe closer to $330 million. And with that, they now have plenty of run room to get Neutron off the ground, at least for the current forecast, which is in literally 6 months or less. And, so even if it gets delayed a little bit, hopefully within 2025. And then the hope was really this year, as you noted, a lot of these companies are falling out of favor and unfortunately can't get the funding that they need. So an example, like last year, they did the Virgin Orbit. They bought a factory in Long Beach for Virgin Orbit, which they claim was about $100 million worth, but they were able to, out of bankruptcy, get it for $16 million. And so the hope is that you might have some more of these on the bucket list. Like Relativity is having struggles with funding, and a lot of other companies are having struggles with funding. And so if you're able to have 100 million, 200 million on the side for something like this, it really might accelerate your revenue path going forward, and or help you with respect to the constellation piece going forward. So,
see, like a good example of something like this is what is that thing called? Lilium. You remember, like they were supposedly doing really well, but they just couldn't handle it, and they went. I think Lilium went bankrupt, right? Are they still around?
I think I haven't heard much from them lately.
Yeah, so. I think every time I saw their like development things, but I didn't see anything outside of that, and so they ran out of cash before they could really get all the approvals they needed.
The thing that's promising to me is that these guys are actually generating gross profit. A lot of these people, like, they barely generate any gross profit at all, and they just spend, but there's no actual, there's no actual path. And these guys are getting to a place where, at least if you weren't spending that 50 odd million that you saw on Neutron, on R&D and CapEx and everything the like, then these guys, apparently, from what they say, without Neutron, the whole space systems and electron side of the business is profitable, like in terms of actual net profit. So, if you were to kind of normalize that, now we don't get the numbers broken out. And that's one thing that I've actually asked is, especially as the business gets more complex, because let's break it down. So the launch business is now going to be 3 different components. It's going to be HASTE, which is our hypersonic, not missile, rocket, hypersonic rocket. That's hopefully, in my opinion, going to be used for the Iron Dome around the U.S. and maybe other places around the world. Fingers crossed with respect to that. Then you have the actual Electron, which was, it's the same body, just different sort of launch design. And then you have the Neutron. So you have 3 different revenue streams from that. And then from that as well, you'll have eventually our own constellation, which for Rocket Lab, I say Rocket Lab will have their own constellation comparable to what ASTS is trying to build, or Starlink, but potentially not necessarily going after internet connectivity, but something different. And then you'll have the subcontract business of just, creating satellites for other people, like they have been doing for Varda and many others. And then you'll have the actual components business, like what are they selling? Software, this, that, the other. So the Star Tracker pieces. So just selling individual parts to other subcontractors, prime contractors, not actually being a part of the building, but just giving them the parts. And then the operations piece, right? So keep in mind, the lunar lander that's on the way to the moon right now, the backup for actually operating that is Rocket Lab, considering they built the solar panels and the actual software. Probably makes sense. So if Firefly doesn't know what they're doing, Rocket Lab can kind of take over. But they've actually, Rocket Lab's, other than, I guess still this is the case, although I don't know if the Blue Origin, Blue Ring came back to Earth or not, but other than NASA and a few other select government agencies, SpaceX and Rocket Lab are the only ones that have successfully operated and returned anything back to the U.S. or not to the U.S. Sorry, to Earth. And not crash tested, right? Like successfully landed it, not like a crash test. So maybe Blue Origin is under to that now, but anyway. So enough of a tangent about space.
Okay, so just. What are some of the other topics? Let's see some of the questions. Let's actually listen to the audience today and let's see. Let's talk about Celsius, because that's something that we have right now and that's been fizzling lately. So I got out of Celsius in the 90s, and I was happy about it. I did re-enter in the 30s only for my position to get crushed. And I did the data. I just looked at the data, and I didn't like what I saw. And so I'm completely out of Celsius. I got completely out of Celsius a while ago, so I didn't like lose a lot of money on it at all. Actually, I made a lot of money when it went up. Unfortunately, my opinion on Celsius is that it suffers from it being somewhat of a fad. You know, I do see it around. I still see people drinking it, but the hyper growth stage of their upward movement does not seem to be like materializing. And so their valuation still is relatively high. And then what I saw, like their overall their revenue is starting to actually go down and shrink. Now, some of it, of course, is because of channel like changes in like inventories from their deal with Pepsi. But still, I don't know. I just don't. I'm just, yeah,
Being cautious.
Yeah, I'm being cautious.
No.
I see competitors like just popping up like mushrooms all over the place that are taking market share, like Alani Nu. So when they came out, they had first mover advantage. And because they were first mover advantage, they really got a head start on it and they really were able to grow really fast. But now that there's competitors out there, they haven't been able to kind of keep up. So yeah.
I'm more in the camp of it's a turnaround play. I think that people would probably be wise to wait a quarter or two before they actually jump into something like this, because there is potentially another quarter. So if you listen to the third quarter earnings call, when I actually wrote an article about this on Seeking Alpha. So if anybody's actually really curious to see a little bit more of my deep dive, feel free to check out that link in the description of this video. But basically, they guided for around 340 to 370 million in sales for the fourth quarter, and that's obviously a large uplift from where they ended the third quarter. Obviously, because of what Chris noted, the stale inventory at the Pepsi distributor. Obviously, they've basically said, you know what, we can't continue to buy from you. We have to sell, the inventory that we're literally sitting on right now. So we actually overpromised you what we've actually been kind of being able to deliver. So, hey, we have to take a pause on that. But hopefully the thought process was they're able to start selling through, and that's what they guided kind of in mid-November. Obviously, they're halfway through the quarter, but they did provide a potential $15 million pressure. What does that mean? So they guided for 343 to 375 or something like that with $15 million pressure. So basically, they were saying year over year was going to be flat to single digit growth, but a $15 million pressure. Now, the $15 million pressure might be that Pepsi was wrong on their forecast. They might have to hold on, off on purchasing more, as Chris alluded to. But the hope was that they'd end up with a pretty good, increase sequentially quarter over quarter, not year over year. And then the hope would be then for fiscal year 25 that they get back to single digit to potentially 10% plus revenue growth. But that's something to kind of still be, figured out. So with that, I think what you'll end up seeing, I think a lot of analysts are intentionally diving the revenue expectations for the fourth quarter. So if they do beat it and they end up with 350 or $360 million in sales, and they end up coming up with a decent EPS, I think you'll see the stock kind of pop. But I don't really anticipate this one going back to like $98 like it did, right? I don't expect that for quite some time. But I do think it's an opportunity for a quick turnaround swing play. But it might not be as fast as what originally we were kind of anticipating. When we took our position, what was that, in early 2024?
Yeah. For me, I am looking at, believe it or not, Monster as a value play. Check this out real quick. So, Monster has been an eternal growth stock for the longest time. So if you look long term, it's been a nice upward move. But recently, it's actually because of the pressure from a lot of these newer drinks, they've actually started to come down. And so the PE right now still is relatively high for its growth. I mean, forward PE is still 26. I think this could really be a lot lower. The good thing is, from a business standpoint, even though their growth is slowing down, because you can see like they were able to grow consistently about 10-20% year over year for quite some time. They've gone down to about 7 right now. The good thing is they do have a really good buyback program. So like right now, if you look at the outstanding shares, they're buying back a lot of shares while they're still undervalued. And so they're still generating net income, and their net income is somewhat flat, but that's fine as long as you're able to constantly keep buying back shares. And so the price of the stock could eventually go up. So if you look at like on a free cash flow basis, they're generating right now like $1.57 of free cash flow per share. And their margins are, they're compressed a little bit, but they're pretty steady at about 27%. So they've had margins, operating margins about 35% in 2020, and then they've kind of compressed down to 27, but they're able to hold it pretty still. So I would say if this is on the radar, it's not like I'm buying this right away, but if they keep at it and the value of this, goes down further, this could be like a nice long-term value play, where you've got like basically a cannibalistic business model, where it's like AutoZone, that's the other thing. We have to look for these companies that are like cannibals, man, because they really provide a ton of shareholder value. Yeah. Well, Google's doing 60 billion a year right now. So these guys right now, they're spending, look at this, about $4 billion of in repurchases right now of common.
And I wouldn't put it past, I mean, Celsius is still small enough. If you look at the actual market cap of the organization, it's probably 6.5 billion right now, but $1 billion of that is cash. So if you think about it, they could actually start getting to the point where they do buybacks. And right now would actually be beneficial because they're actually generating an okay amount of actual EBITDA. And so with that, my hope would be is they get to a place where they can get their revenue piece sorted out. And somebody just brought up internationally as well. Their growth internationally did not take a skip last year. Granted, it's only $20-30 million a quarter, and then actually not even $20 million a quarter in international, but it was up 35% year over year on average for the first 9 months of 24 compared to the first 9 months of 23. And so I'm curious where you end up at the end of this year. But like I said, I mean, 35% when you're doing, less than 100 million isn't really a lot. So the hope would be is that you at least get to a place where you're selling 9 figures or 100 million plus. And then, that's when 35% year over year starts to kind of really matter and actually hit the bottom line. But my hope would be is eventually Celsius does a little bit more buybacks and stuff.
So this is what I'm talking about. Let me just make it bigger. Basically, if you look at this like AutoZone, right? This is the shares outstanding. So anytime they generate profit, they basically keep buying back shares. So AutoZone is a classic example of a cannibal, where basically they just keep buying back their outstanding shares. Their profitability is growing slightly, but the share count is going down. So for shareholders, the stock goes up in value significantly as they keep buying back the shares. So they've bought back 87% of the float that they've had. Another one is Home Depot. Home Depot is basically halved the outstanding shares that they've had. NVR did that, and IDEX have done that. So it's all about like how these companies allocate capital towards like share buybacks and how much value gets generated from that. So as an example, if you look at AutoZone, so if you had bought AutoZone stock right now, it's worth $33,000. If you had bought it, like, look at this, in 2010, it was only $110. It's a 33%. I mean, a 3,000% return, right? No, not even more than 3,000. Let me see. Yeah, it's a freaking crazy return, man. Especially if you got into the 2000, it was like $30. So that's what, like 1,000x.
It's a lot. Yeah, and I think what it was, I remember doing the math one time. It was like it was a 6x return on the profitability, but like you stated, they bought back, and now they only have 12.5%.
Not 1,000, it's 100x. Sorry, it's 100x.
So 600% increase in the profit, but then they bought back 87.5% of the shares or whatever. So that leaves 12.5% of the original share count. So 1/8. So you could take 600 times the 8. That's where you get the 40,000% return. Right, 600% times 800%, so the math starts to add up. So it's, something comparable. But actually, I wanted to show how, like you kind of noted, I've been writing articles about Google as well, and with those, the share count has actually started to move, and the big chunks are really starting to show up now. They're getting to the 65 billion. So they started at 15 billion shares outstanding. And before we know it, I mean, this was as a 3Q. I wouldn't be surprised if we enter into the to the 11.5 or so billion, or maybe even below 11 billion by the end of 2025 timeframe. Yeah. So with that, if you look at that perspective, where are we at right now? So we're at 12.5 divided by 15. That's 17% of the shares outstanding have already been purchased back. Granted, if you were to have not had share-based compensation, it would have been north of 20%. So keep in mind, a lot of this is just offsetting the fact that you do pay Google employees a good bit, but at the same time, they kind of deserve it. And the company's making enough money where it offsets it more than obviously it dilutes it. So in that respect, I'm okay with it. But it has been nice to see them kind of squeeze back a little bit on how much SBC they're giving out, because sometimes people get a little bit too liberal with that.
Yeah, I think I brought this up on like the other post that I had with what's his name, Sam, yesterday. But if you look at it, they're actually controlling their costs pretty well while still growing their top and bottom lines. So Google is definitely the one to be in, man. You know, yeah. Are there any plays that you're looking at for the next for this earnings?
For this earnings, so obviously we know the one about SMCI. We can get into it or not, but I think me, you, and Steven have taken a pretty definitive position along with our friend. I don't know how public he wants to be or not, but that's been fun. And I'm curious to see what happens with that. And like I stated, I've seen some people unfortunately selling out of NEXT and things of the like. You have to recognize the hair that's on this one, right? It could either go, it's like binary. It's like it's either going to do well or it's going to do awful, right? So, it's kind of a head scratcher as to what actually shows up. But the more I read lately, it seems like people are starting to turn positive on it, which is interesting.
On which one? On which one?
On SMCI.
Oh, yeah.
So I've started to see more people be like, I don't know, like it doesn't seem like the company is burning and crashing to the ground. So maybe the accounting wasn't that big of a deal. And I'm like, it's kind of what we talked about with our buddy the other day, right? It was like, I mean, the company's still putting out a great product and people want it and it's in demand. So what's the worst that actually happens? Like,
they have to restate some revenues, whatever.
Like it's not going to be too awful. But other than that, I bought some Rocket Lab at $25 like a couple days ago. It's obviously done well. What else is there?
Did you buy Leaps or did you just buy? Did you buy Leaps or just buy stock?
Stock, yeah, just so I have it. And then I bought some Bitcoin. And then really that's it.
What's our joint what's the Moolah portfolio look like?
Where is it at? I just had it open, didn't I?
Yeah, NuBank's been going up too lately. That's a good one in terms of like a quick turnaround, in my opinion, because I think like they got crushed pretty much by. Okay, this is interesting.
What's that?
Warren Buffett's Berkshire Hathaway increases holdings of Brazilian bank NuBank.
There you go.
There you go, guys. Let's go. Buffett's in the train with us. Let's go. Let's see. This increased NuBank's holdings to 86 million shares, valued at nearly 1.2 billion.
It's bigger than I was expecting.
Wait, hold on. Is this new? I want to make sure that this is the right information. Hold on a second. Because if Buffett is back in, that's going to be big. Hold on. I got to look at 13Fs. For Buffett, NuBank. Oh, there you go.
You want to share it?
Let's see. Let me see. Hold on. Yeah, here we go. Yeah, if Daddy Buffett is buying in, well, bro, look at that. Warren Buffett makes sharp U-turn as Berkshire Hathaway discloses 8 in stake in crypto bank stock.
So U-turn meaning he was selling out before?
I don't know. Hold on. Stock price jumped over 30% year over year. As previously described, Rat Poison disclosed a massive stake in this, has its own crypto platform. Okay, whatever.
That might be the U-turn that they're talking about with respect to buying into NuBank, even though they have a crypto.
Okay, hold on a second. Berkshire Hathaway increased from 0.1 to 0.4 in 2023. What does this mean, man? Let me see. Did the 13F come out with Buffett?
What does it mean, Christopher?
Is this new stuff or top buys Berkshire Hathaway? Let's see. Ugh, damn it. How do I find new? Okay, let's see who are buyers. Change in shares from, let's see, BlackRock. These don't matter. Norges doesn't matter. Date reported. I need to see this one. God damn it. I have to see what the, hold on. Okay, so not a lot of people reduced it. So Berkshire, NuBank. What did they do? Yeah, but I wonder if, because this might not be updated. I have to look it up. We'll have to look for the activity. So if they were reducing it and for some reason they just jumped on it, that'd be pretty big. You know?
Yeah. Honestly, man, there's some things that I've had constant buys on. So like NEXT, I've had constant buys on like every time I get paid. You know what I mean? Bitcoin, Rocket Lab. And so now I'm like you stated, some of those are getting into maturity. And I'm not saying that that's bad, but it's like you could, I mean, I'm not saying Rocket Lab's done, but it's like I kind of have a large position in it already. So it's like, would it be nice to have something like NuBank? And I'm not opposed to it, right? We bought it in the public account, and I've been meaning to take a position, but I just haven't. Oh, I guess one that I need to disclose is I bought Hood. So Amit said, in a chat the other day, is like, if you buy Hood, I'll buy Rocket Lab. So he bought SMCI, so I bought Hood, and then he found out that I bought Hood, which I bought because he bought SMCI, and then he ended up buying Rocket Lab anyway. So kind of a twosie in that respect, but he's up on his Rocket Lab, I think, so can't complain yet. But other than that, let's hop back over to the portfolio itself. And as everybody knows, we generally try to keep it as the highest value in the portfolio to the lowest value. So we currently have NEXT being the largest at about $2,100. It's pulled back a little bit the past few days, but still up pretty decently at almost 50%. BPYPN. Those are both about $2,600, $2,500 combined. Then you have new. That's up about 10% since we bought. Our cost base on that's $11. We bought close to the bottom. It already started running a little bit and turned around, but Carnival, Norwegian, the Bitcoin's still doing well, and then we got HIMS, which is up 130%, and then Celsius and Cash and Accelera. Yeah. Interesting.
Like I said, our portfolio. I mean, there's not a lot of places to park money right now. I'm thinking we should go up on our NuBank position, and I think we should add SMCI on a quick turnaround. So the question is, what do you want to reduce? What do you want to keep? So my thing is with BPYPN, I think tomorrow we should take we'll talk about it offline, of course, but we should take a portion of that and put it in there. With NEXT, maybe we can shave a little bit off the top. And go with that.
See, I don't really care because I have my own personal allocation, So
I know. I'm just trying to maximize our total portfolio returns in this one, because this is our like trading, sort of like keeping a benchmark of like, hey, we're really good investors. We know what we're doing portfolio, So like we're trying to maximize our total returns here. So I think SMCI is worth trying a little bit. So let's talk offline on the allocations, and then we'll go from there.
And there's been some interesting stuff in your. So I wrote a few things in my Patreon and YouTube, and then I know there's a really good discussion about something that was noted today. about NEXT as well in your Patreon. So if anybody's ever been curious and you like what you're hearing about NEXT, or you want to hear more information, then there's some avenues for you guys to dive deeper, or you can see my Seeking Alpha article. It doesn't have the stuff that was talked about recently since the Trump election, but it alludes to it. And obviously a lot of it was, I guess, followed through with. And so if you're curious about where I think it's going under the Trump administration, you can always read that on Seeking Alpha as well. That's in the description.
Yeah. The other thing is, did you see the Venture Global news? But you know what? I don't want to end this early, but let's end this early. I got to use the bathroom, and it's not one of those freaking good days. So let me go fucking take a shit, dude. And we'll continue this next time. I'm sorry, guys.
You're good.
I've been holding it in for like 15 minutes, and like this is one of my like solid poop days, like and solid poop time. So I really gotta go.
Hey man, when you're getting old like Chris, you gotta go. You gotta go.
I know, man.
I'm just kidding.
Next time I'll wear a diaper or something. I'll talk to you later. Bye.
All right, all right, everybody. Thank you. I won't end it off early. I will end it early. But before we do so, I do want to give a shout out to Chris. We are keeping track of both the 1 year performance. Now that we've been doing this over a year, so the 1 year is on the right hand side. We're up 96% on the year, comparatively 27% on the SPY. And if you look to the left, that's the year to date. So we're obviously going to pull back from this a little bit because obviously, for those of you that saw, we were down, close to 1% today. But as of yesterday, we're up 9% year to date, and the S&P is up 3.5%. So continuing that overperformance with the S&P, but of course, that's always a piece where you don't necessarily know what's going to happen. We're trying to do our best and meet. But one of the things that I'm trying to convince Chris is, I'm really curious if I don't want to say overexposed to the cruise lines, but we're up 57, 67%. I think the easy money's been made. So I might offline have a chat with him to see if we could trim some of these. And then same with HIMS. I'm curious what his thoughts are. I haven't done any due diligence on HIMS, to be very frank. In the unfortunate event, I look like an idiot because I think somewhere on Cashflow Chronicles, very early on, I did a look on HIMS, or it might have been my own channel where I did a look on HIMS, and I was afraid because of the marketing expenditure on HIMS that I was just like, I don't know. It reminds me of Wish, when Wish was taking all the revenue, using it as marketing. The difference between Wish and HIMS is that people actually stayed with HIMS. Nobody, all that money used on marketing, they couldn't retain customers with Wish. So that, you live and you learn with some of these things. A lot of this is like experiences. And I had a very wise person that I work with. They're probably 5 or so years older than I am in the workforce, and maybe not 5. That might be dating him a little bit, but he's probably maybe 3 or 4 years older than me. It's like a lot of the stuff that we do is like pivot tables, right? In our heads, we're trying to like capture all these experiences and diversity of thought through all these different experiences that we have through life. And we have this pivot table in our minds to be like, ooh, I remember this, I remember that, or I can use that as an analog, or that's different because of this uncertainty or that uncertainty. And so you're just trying your best. So, like, for example, the thing that struck me with HIMS was the overspending on marketing. But, what I should have done was look at how happy are consumers? Are they happy with the product, or are they returning it hand over fist like they were with Wish? So, had I done that, would be up a good percentage, but here we are, and that is what it is. So, but other than that, I know that you guys are always anticipating and really enjoying Cashflow Chronicles. If you guys are interested, please subscribe. It's completely free. What I will do before we sign off, it is January 23rd. Contemplate becoming a member, but being a subscriber is free. It allows you to chat in the communications box over here. But I do want to run down some of the stocks that we have up here on the ticker. So we have Apple at 223, continue to see a little bit of struggling compared to the rest of the Mag 7. Amazon at 235, Bros at 61 bucks, Google at 198, Palantir at $79, SPY at all-time highs at $610, the Qs at 533, Bitcoin at 103, WTI at 74. We're pulling back. And Henry Hub at $4. Nevertheless, hit that like button. So lots of things on here that we talk about a lot. You know, Amazon's been one that I hold in my portfolio. Google, um, Bros has been one that's been extremely well for me this past year as well. So those of you guys that haven't been following Bros, I wrote an article about that on Seeking Alpha. You can catch that in the description as well. Believe it or not, not a lot of people read that one. So probably not a lot of people are following Bros, but it's up 100%. So screw you guys if you don't care. Bitcoin at 103, and then the thing that I'm continuing to harp onto is WTI. I'm continuing to think that that's going to dip back into the 60s, oil. And you're hearing Trump push the Saudis. If you listen to any of his speeches today with the World Economic Forum, pushing the Saudis to lower oil and gas prices, and he's really trying his best to end the war in Ukraine. And with that, hopefully we see less dependence on different oils supply chains, and we get back to normal eventually. And I think with that, you have the war in the Middle East already concluded or concluding, and then you'll have the the Ukraine war concluding, and with improving relationships with Russia, China, etc. Hopefully the price will eventually go down, because I think a lot of the reason why there's so much issues right now is because of all the sanctioning that Europe and the US have done on Russian oil. And to think about it, Russia does supply about 8 or 9 million barrels a day of crude oil, which is 8 or 9% of the supply. So that's basically 8 or 9% of the world's supply that you can't be connected up to. And when you have a supply demand problem where 500,000 barrels or 1 million barrels a day out of sync really causes a huge issue in terms of prices, then that's really the probable denominator for what's causing prices to be even in the mid 70s to high 80, or sorry, mid to high 70s. So but still long on natural gas, because I do think that we'll get a lot more exports here in 2025, and even more so in 2026. But yes, natural gas, different than petroleum that you put into your car, petrol as they call it in Europe. But yes, margins for U.S. gas are down. U.S. gasoline prices, not natural gas, but gasoline prices. That's one thing that I'm actually trying to understand as well. When did those turn around? So like the Sunocos of the world, the Marathon Petroleums of the world, the who else? Phillips 66s of the world. When do those margins turn around? And how historically bad are they? Because when they do turn around, it's going to be a huge upswing, and you could ride that. And so my hope is when can you time that? And do you do that? Do you go with the guys that are in the downstream with the refining, and do you ride that opportunity? It doesn't necessarily match verbatim with the price of oil and gas, but it sometimes can correlate. Or do you wait until you see a leg down in upstream prices, meaning like the actual sales of oil and gas prices? Or do you focus on the midstream? And I know that's where like Steven really excels with respect to Energy Transfer or Enterprise Partners or Kinder Morgan or ONEOK. So anyway, just some good things to think about. There's generally speaking, when people think about industries, they think it's just like a single industry, but generally industries are broken up into many different sub-industries to keep in mind. So when you talk about energy, there's so many different avenues you can go down. There's coal, nuclear, etc. And then even within those, there's the people that are supplying. So like, for example, when you talk about LNG, liquefied natural gas, are you going into the suppliers, the ones that are actually supplying the tanks and picks and shovels, kind of like what Chris Patel is looking at with one of his stocks that I don't know if he's publicly noted or not, or are you going with a different one, which is another one I'm looking at, which I think I talked about, SLNG, Stabilis Corp. I haven't made it an investment, but it's an interesting one. I'm trying to see if I can get a chat with the CEO. And then you also have the actual LNG sellers, right? The ones that are actually shipping and getting it, the tankers, even you could, or LNG tankers, the one that you want to invest in, or the people that are actually selling the gas, like the Total, Shells of the world, are those the ones you want to invest in? So there's like so many different avenues that you can go down. But anyway, I'm losing people. They obviously don't give a flying fuck about oil and gas. Otherwise, it'd still be growing in terms of numbers. And like I said, everyone only shows up for Chris anyway. So obviously we're hemorrhaging people. We've already lost about 15% of the audience. So as always, hope you guys enjoyed. Let me know what you guys think about what we chatted about today. And hopefully me staying an extra 10 or so minutes was useful. And hopefully you guys enjoy and have a great Friday. Don't forget to close out some of your options and don't let them close in the money. Always, 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 always buy out expiring options if it's really even somewhat close. Even if it's for a penny, 2 pennies, just buy it out. You never know what's going to happen after hours. And I don't want you guys to lose money just because you got careless. Thank you all.